Finance Minister Arun Jaitley's maiden budget has been preceded with a great amount of anticipation and expectation. This is the first real communication about economic agenda from the newly elected government, and expectations are high. With respect to capital markets, the cost structure for STT needs to be rationalized. Clearly, with the cost of trading coming down, arbitrageurs as well as investors would flock to the capital markets in larger droves. FIIs on their part are looking for an exemption, or rather an exclusion, from the applicability of the indirect transfer provisions introduced post the Vodafone saga. Deferral of GAR is also a key ask. That, coupled with clarity on the working provisions of GAR along the basis of Dr. Shom's report by examples and exclusions negative list, would be a welcome step. To give impetus to the domestic fund management industry, the onshore fund managers are looking for an exemption from being treated as a PE when they manage funds of offshore funds. Moving now to banking and NBFC sector, a full deductibility of the provisions created on NPA accounts would be a key requirement for the banks and NBFCs. These are anyway being made in accordance with the RBI norms, and full deductibility aligning them with the RBI guidelines would be important. This would mitigate timing differences between books and tax laws. With respect to finance leases, depreciation entitlement would be again a necessary point for clarification. Judicial decisions which are conflicting have cured the pitch. Securitization trusts, banks and NBFCs invest in securitization trusts which are holding pooled assets of distressed assets. Here, allowing the expenditure incurred in earning the exempt income would be something that would benefit the industry, since the securitization trusts are anyway being subject to a distribution tax. With respect to AIFs, presently what we have in place is a pass-through status for venture capital category of category 1 AIFs. What the industry is looking for is a similar tax pass-through status to all other categories of category 1 and category 2 AIFs, which is private equity funds, infrastructure funds, SME funds, etc. To my mind, these provisions, these suggestions, if implemented, along with the structure and timeline for introduction of GST, DTC, as well as administrative reforms, would send a very clear message to the industry that India is serious about its tax reforms. Thank you and good luck.